Hi, everyone. Welcome to a very special on location Carson's Take 5. This one, Sonu, we're titling on location from Omaha, by the way, at our partner summit with all of our partners. It's going to be a lot of fun, a couple of days here. We're calling this one, Are We Slowing Down? Now, I hope I don't butcher the quote, but Einstein said, life is like riding a bike. To keep your balance, you have to keep moving. So, Sonu, that's the question. Is this economy slowing down, and are we headed straight for a recession? I heard that on TV last week.
Yeah, look, and there's a reason people are talking about a recession once again, and that's because when we got the Q1, the first quarter's GDP report, first quarter GDP rose 1.6%. Right, to put that in perspective, before the pandemic, 2010 to 2019, Ryan, we grew at about 2.4%, so 1.6 is below that. You think, oh, wait a minute, that's soft, right? Are things slowing down? But then you look under the hood. What matters? What matters is household spending, business investment, government spending. That's ultimately what tells us, okay, what's the underlying growth, underlying trajectory of the economy? And that grew at 2.8%, right? So what pulled down GDP growth in the first quarter was actually inventories and net exports, right? These are very volatile. They tend to get revised. That's why we look at something called real final demand. How much are households, business, and government spending? That was above trend. That tells us things are going well. The other thing was the employment report came out.
Right.
That was softer than expected, and that's why we're also, once again, seeing recession calls, things like that. But look, in April, the economy created 175,000 jobs. Before the pandemic in 2019, every month, you're creating an average of 166,000 jobs. So 175 is above that. It's strong. Over the last 3 months, we created about 242,000 jobs on average each month. So that's really strong. And at the end of the day, look, the unemployment rate, Ryan, is 3.9%. It's been below 4% for 27 straight months. That should tell you the economy is going up.
So I'll just chime in. So again, 175,000 jobs created last month. That's still pretty darn good. Yes, I think over the past year, we're right about 240,000 on average in the last 3 months. So the TV told us, well, we're slowing down, maybe to a degree. Do you think, Sonu, at 175,000, if we average that for the next year, that's still creating growth. That's still a positive thing, though, right? Maybe we're not creating the 300,000 or 400,000 jobs that we were on average this time a year or two ago. But we really don't want to sustain that because inflation, we've talked a lot about inflation on here. Inflation is the big worry if the economy's too hot, if things are too good. So maybe coming back a little bit, maybe slowing, like when you're at a bike, like Einstein said, you can slow down a little bit. It's not like you're just going to fall over, though, right?
Exactly. You don't want to go too slow.
Yeah, no, I do. I don't ride bikes very fast. I have to be careful. I might fall.
I'm in Chicago, so we have to keep up with traffic there when you're riding on the roads. Yeah. But no, exactly. To your point, a year ago, we are creating on average 275,000 jobs a month. That slowed down, certainly, right? But it doesn't mean the economy is weak. At the end of the day, that's a bigger part of the story. And for the economy, what matters? It's consumption. 70% of the economy is consumption. Where does consumption come from? It comes from incomes. Aggregate incomes across all workers in the economy is growing about 5.5%, 6% right now. That tells you nominal GDP, before adjusting for inflation, is also growing around that. By the way, that's good for profits and revenues for companies. If nominal GDP is growing between 5% and 6%, that's not a bad thing.
GDP, what's that? That's our economy, right? Gross domestic product. Nominally grew 6% last year approximately. This year, maybe not quite 6, but it's not far off. And that, again, 2 years ago, nobody in their right mind thought the economy would be that strong, but it's where we are. So how much time do we have?
We have about a minute.
Okay, good. Thank you. Okay, good. So again, I guess the key concept again, are we slowing down? Doesn't look like it. Maybe some areas, maybe a little bit, but again, that can be a positive thing.
If at all, it's be slowing down for a good reason.
Exactly.
Things are normalized.
Yeah, we were driving on that bike like Lance Armstrong. Now we're driving on like you and I. Slowing down a little bit, but that's okay. And one final thing, we've talked about this before, but productivity. Our country, we've seen a surge in productivity over the past year. Let's keep this a real high level and real simple. So we haven't seen anything like that for about 30 years in our country, productivity higher. When you look at history, when you have productivity, it's like that cherry on top. Some of the best years of economic growth and earnings growth were years that we had strong productivity, came in better than expectations. You mentioned that weak GDP we had last decade. Well, we had weak productivity the whole time. So with productivity stronger, we've talked about that before. We're running out of time, and we won't get into it too much now. That is that differentiator that we see that can keep this economy going nicely. So again, with all that, this is the latest Carson's Take 5, talking about the economy slowing down, but we don't think it's slowing down that much, and we definitely don't see a recession. See everybody next week. Take care.